good afternoon to you all, and a warm welcome to this plenary session on sustainable payment systems and managing crisis. My name is Jacqueline Jumah, the Director of Advocacy and Capacity Development at AfricaNenda, and I will be the moderator for this session. In the room, we have Carol Gitobu, the Senior Market Engagement Manager at GSMA. We have Hanna, Head of Business Impact at SentBe, and Antonia, Esser, Senior Engagement Manager at Cenfri. We'll shortly delve into a discussion on the role of instant payment systems in fostering financial inclusion and economic growth in Africa, and how we may ensure their inclusivity and sustainability. In this discussion, we'll also highlight crisis management with respect to implementing robust risk management frameworks and approaches to strengthening regulatory compliance. I'd also like to take this opportunity to welcome you to share any questions you have about this theme in the Q&A slot as we go along. We'll be happy to answer your questions after the plenary discussion. To start us off, I'll share a short background by defining what we mean by instant payment systems. AfricaNenda defines this as retail payment systems that have multilateral open loop and enable digital push payments in near real time for 24 hours a day, 365 days a year, or as close to that as possible. When it comes to inclusive instant payment systems, these are therefore those that enable low-value, low-cost push transactions that are irrevocable based on open-loop and multilateral interoperability arrangements. These are also systems where licensed payment providers have fair access to the scheme and participants have equal input opportunities into the scheme. These are also systems where the central bank has a role in the scheme governance and end users have access to a full range of use cases and channels. Africa is at the forefront of innovation, particularly in the realm of digital payments. The digital payment revolution in Africa has played a vital role in driving financial inclusion, enhancing efficiency in the delivery of financial services, fostering innovation, and stimulating economic growth. It has brought about significant advancements in the way people manage their finances and engage in economic activities, ultimately improving the quality of life and contributing to the overall development of the continent. Inclusive instant retail payment systems are important as they play a vital role in creating universal access to financial services for all Africans by facilitating more secure, low-cost daily transactions. These systems form a powerful mechanism for grassroots economic empowerment in Africa. We'll start our discussion today by hearing from our panelists the barriers that inhibit inclusive instant payment systems in looking at two things: the viability and sustainability of these payment systems. My first panelist to speak today would be Antonia. I'd like to hear from you, Antonia. What do you think are the barriers to IIPS viability and sustainability?
Thank you so much, Jacqueline. And it's really an honor to have been invited to participate in this panel. Also very pleased that it's an all-ladies panel. Don't get that too often, so that's great. But in general, just a really big thank you to the Alliance for putting this together. And it's such a great set of discussions so far. So we hope that this hour will be quite interactive, so please also ask a lot of questions. But thank you so much for that first question, and it's not an easy one. I want to start off by saying that I think an incredible amount of work has been going into the development of instant payment systems over the past couple of years, past 5 years, but even before that, past 10 years. So it's a really opportune moment to assist the architects of these instant payment systems with some insights from the field. And my team and I, we have been looking at instant payment systems on the continent and beyond for several years now. And I think one thing that is very real and is a main inhibitor of the viability of instant payment systems on the African continent are still the major cost drivers. These cost drivers can really undermine the business case and the use case for an instant payment system. And what's quite interesting when thinking about a viable business model for a instant payment system is to ask yourself, like, how big is your market? How many people could you reach, even if everybody was already financially included? And I think the reality on the African continent is, if I'm still up to date, probably not, but the average number of adults per African country is around 12 million. 12 million adults sounds a lot, but in terms of transactions, and if you're building a new system, it may actually not be a very large number of transactions that can create a business case that is conducive for instant payment systems to be a public utility, which is something that in the discourse, in the discussions we're hearing today around instant payment systems, we actually want countries or regions to facilitate digital payments as a public good and not a for-profit endeavor, because it should be actually able to displace cash where it makes sense. And cash is very much a public utility, or perceived to be a public utility today. So in order to achieve this public utility kind of a piece of architecture as an IPS is, you definitely need enough transaction scale, because the business case evolves around the scale of transactions. So you need as many transactions as you can on the system. And if you're a particularly small country, you may actually not be big enough in terms of your size and the number of adults to have a viable business case. So this actually becomes then a vicious circle, because you need a sufficient scale to keep the per transaction cost low. But if you don't have enough scale, then your per transaction costs are high, and then you're not going to reach the public utility objective. So the lack, I would say, the challenge today is to build these fit for purpose systems that are really tailored for the context that you're operating in. So sharing of infrastructure may be a potential, but I want to focus on the challenges for now. The other point I want to raise is around the limited value proposition for potential participants of the system. So now these are the payment service providers, right? They need to feel like this shared payment platform is actually meeting their needs. They have invested in the absence of such a system. They have invested already in bilateral partnerships, for example, especially if they're the larger or incumbent dominant players in the market that have been able to serve the majority of the market that is already digitized with some instant payment products, or even not instant, but some digital payment products. So basically, to create the necessary scale in these instant payment systems, you need to sign up as many payment service providers as you can to create the scale. But how do you convince these incumbents that may often have monopolies in the African markets to join your system? What is in it for them? And I think that sense of interoperability will actually lead to better outcomes for the entire market, is in the making, but it hasn't yet landed across the board. So there may be a limited value proposition for some of the providers in the market, as well as consumers, because often what we're seeing to date, as these systems are still in development on the continent, is that not all use cases are actually possible. So often I can do instant payments over distance, I can do instant payments at a merchant, but I can't yet receive my government subsidy, I can't yet pay the taxes. All the other things I pay for actually require me to use a different instrument, and in the worst case scenario actually involve cash. So I am forced into the cash in, cash out, backed up into that corner basically. So that actually means a lot of the transactions that could contribute to the scale in the instant payment systems are still conducted in cash, because they're simply not possible yet as part of that instant payment infrastructure. One last point I want to raise is around the risk and fraud. And I think it's a real shame and shameful, actually, the amount of social engineering fraud that the African populations across the board, across all countries, are exposed to today. And I mean, it's really particularly bad for vulnerable, marginalized population groups. They're exploited for the little that they have. And social engineering fraud is, where you are tricked into handing over either your account details or sending somebody money, and somebody's impersonating somebody else. So it's very hard to, if you very new to digital payments, to really get to grips with what is real and what is not real, fact from fiction. And what we also need to recognize is that devices are often shared in a household. So, there's one phone, for example, that many household members are using. So you actually need to have a full household of cybersecurity experts that should be able to tell fact from fiction. It is just the lack of consumer recourse and the fear that these kind of fraud instances create for people are real kind of put people off digital payments, really exploit them. But also it means that instant payment systems need to create a secondary layer after the payment service provider to give recourse, and obviously, ideally, before the fraud already happens, offer some kind of notifications or caution against that. So I think I'm going to leave it here. And allow the rest of the participants. There's a lot of challenges to discuss, but very much aware that a lot of this is being worked on. So I'm hoping to contribute to the discussion going forward. Thank you, Jacqueline.
Thank you, Antonia, for an elaborate start. Indeed, the cost aspect is a major challenge, and the high cost to serve, limited incentives for scheme participants, and the risk of fraud. Let us also hear from Carol. What would you say are key inhibitors to IIPS viability and sustainability?
Great. Thank you, Jackie, and good morning, good afternoon, everyone. I'd like to start off by thanking the Alliance of Digital Finance Association and also the Digital Frontiers Institute, for where I serve as an alumni, for giving us this opportunity and this platform to share more about what are the barriers and what can we do to uplift these barriers. So I'd like to kick us off with one interesting conversation that is very close to my heart, and I'll tweak it a little bit, financial exclusion. I know most of us talk about financial inclusion, but let's talk about the exclusion part of it. So when I talk about financial exclusion, is the situation in which individuals and businesses do not have access to useful and affordable financial products and services that meet their needs. And these services include the transactions, payments, savings, credit, and insurance, which are all delivered in a responsible and a sustainable manner. So there is one thing when we talk about inclusion is having access to a transaction account, which is a very first step towards a broader financial inclusion. Then there's the next step where we're moving to from access to, and now how about using these accounts, which is the next step for countries. A few of these countries are already at 80% on to achieving these access or end usage of accounts, where we have a few of them, which I'll mention. We have China, Kenya, India, and Thailand. And these countries relied on reforms on private sector innovation, a push to open low-cost accounts, including mobile and digitally enabled payments. In addition, the lack of digital literacy skills is also a key hindrance to the uptake of available payment system. So we give them an account, or we give them a mobile device, or an account where they have access to these services. But we also need to upskill them on these digital literacy skills on how to use these products and services, and sensitize them on the existence of these products and services that we are all building together to achieve a more sustainable world. I'd like to say that building financial and digital capabilities of the people who receive transfers is essential, not only to help them access transfers, but also to demonstrate the benefits of digital payments. And I like the fact that we are all here together discussing this very great topic, and there will be need for us to collaborate between public and private sector stakeholders to help build an inclusive and efficient digital payment ecosystem. The next barrier I'd like to discuss with you is more on insufficient infrastructure. So we've talked about the user. So how about the infrastructure that we are having? So including the lack of affordable phones and networks that limits the scale up of payment system. According to the recent, the GSMA State of the Mobile Industry Connectivity Report for this year, 2023, affordability of devices and data continues to disappropriately impact the underserved across the low, medium income countries. Affordability of an entry-level internet-enabled handset remains relatively unchanged, while affordability of data continues to improve across most regions. However, while the affordability of an entry-level device across the LMICs is equivalent to around 16% of average monthly income, this increases 40% for the poorest 40% of the population and 55% for the poorest 20% across these low, medium income countries. It is equivalent to 24% of average monthly income for women, as compared to 13% for men. So again, as Antonia had mentioned before, it's great to see women coming together, and hopefully also organization will see the need for gender equality and helping to bridge the digital divide. The next barrier I'd like to discuss with us is about the fraud and risk, which was also shared initially by the previous speaker. And when we're talking about fraud and risk, I think it remains one of the common barrier which plagues the global economy. The growing risk of financial crime and fraud threatens the customer's life cycle span, from application to account opening to payment transaction and non-monetary account changes. And it harms both the customer confidence and also the service providers' reputations. Some customers actually worry more about how will I use this payment platform? In case there is a fraud or misappropriation of funds, how will they handle the reimbursement? So sometimes the worry is beyond just transacting, but in the eventuality that I lose money, how will I get my money back? Users are cautious to make use of the payment platforms in fear of also their personal data. What are you storing as a payment service providers, as PSPs and also FSPs? What personal data are you storing in your system, and what data are you sharing across the third parties? So there will be need for organizations to evolve, to collaborate, and also to share data and leverage data sets and technologies to build a more holistic security strategy, and of course adhering to each other's privacy and protection policies, which cut across different payment platforms, and also they are also different depending on the market that you're serving from. The last one I'd like to share more is lack of the standardized interoperability between different payment platforms and the regulatory challenges that may hinder the widespread adoption of inclusive instant payment system. So how about we think about how can the payments platforms that we're building be interoperable, that we don't have to reinvent the wheel when we're building a different system, that we cannot even have, a common tariff guides that are shared across the different payment platforms, so that when the user is thinking about payment platform X and payment platform Y, it doesn't really have to have a very huge difference, and they are able to just plug in and play depending on which payment platform suit and is best fit for their needs and their challenges. Perhaps I'd like to leave it here and hand over to Hanna and hear what more barriers have they come across. Thank you, Jackie, and over back to you. Let me hand it over back to you instead of Hanna. Thank you.
It's all right. Thank you so much, Carol. Interesting perspectives on data, collaboration, and I'm sure in the second fold of the discussion, we'll get into more details of approaches and, happy to listen to some examples that, can help our stakeholders across board. Hanna, over to you. What do you see as some of these issues in terms of, issues to do with viability and sustainability?
Yeah, thank you, Jacqueline. And so I am very glad to be part of this session. And on behalf of SentBe, we are also very grateful to be invited here. So sharing about our experience based on some barriers that we are still facing is that in the area of fintech, as in many other technology-driven industries, many technically sound solutions often really struggling to enter into the market due to regulatory limitations, or there is no any regulations applying to these new emerging technologies. So to address this issue, there is a very big need for alignment between both public policy and private sector players in understanding the current common financial existing financial landscape and ecosystem, and how diverse fintech solutions can improve financial inclusion the situation. And then I have been observing that still many regulatory policy measures can remain very implicit, and also they are very still much inclined to the legacy, which is traditional financial institutions. So, and traditional financial institutions, notably banks, continue to play very crucial roles, but at the same time, fintech firms, particularly like us, those offering instant domestic and cross-border payment services, we really need to collaborate with these established and esteemed financial institutions as well. So therefore, from my point of view, financial regulatory authorities must establish very clear, at the same time, very cohesive direction to promote a very harmonized ecosystem to coexist. And then, like I said, this approach would allow both traditional and newly emerging financial institutions or service providers for individuals as well as businesses of all sizes, and we can coexist all together to make more inclusive financial ecosystem. And then, and Carol said, in this sense, public and private partnership is really in practice is needed and is really needed to strengthen as well.
Thank you, Hanna. We'll double click on that in the next poll. So thank you, Hanna, Antonia, as well as Carol, for the detailed showcasing of these issues. We'll now switch gears to appreciating the solutions, because it's useful to raise the gaps and not only leave it there, but just also share recommendations. I'll allow you, Anna, to start us off with how digital payment stakeholders can ensure this viability and sustainability. What should be the priorities? And also how they can ensure the implementation of robust risk management structures.
Yeah, so in order to build and establish a very viable as well as very effective environment for instant payment system, and also for inclusivity, the critical foundation is found in the establishment or dissemination of digital infrastructure or ICT infrastructure. But but from my view, it is important to note that this infrastructure doesn't need to be really high-end level, because the case in Kenya and stands as a very good example of this idea, because rather than focusing on the very latest high-end technology, but Kenyan government and private sector players, they were able to kind of make a very successful case by working with what was already kind of at the time readily available to the people and also to the country. So, and in that case, 2G phones and associated infrastructure was already kind of there, and then they really at maximum they utilized it. And then so that's why my point of view, kind of we really need to kind of assess what is feasible right now within a specific environment, and also we really need to identify areas where some more improvements are needed to achieve our goal of financial inclusion. And once these needs are identified, the next step is to involve mobilizing the necessary resources from the government as well as from many private investors as well. And also here, there must be collaborative efforts kind of all together and kind of for following the kind of common goal of financial inclusion or digital inclusion, social inclusion, and so on. And furthermore, it is very important that these resources are channeled to the right financial and technological players, because as I mentioned earlier, like we do have already very feasible technologies, but kind of sometimes it is not it cannot be in the market because of some regulatory limitations or the absence of right measures and so on. So these players also need to really prioritize and customer-centric approach to ensure real kind of changes in their users and in their kind of those who are using payments, who are merchants and so on. And then in this efforts could be also I am thinking that kind of it is quite in line with kind of some many players efforts in ESG too. So this approach would be the key to their and also our sustainability of all kind of digital economy related activities.
Thank you very much, Hanna. Indeed, as mentioned, it's not about ensuring the state-of-art technology implementation. It has to do with strategy around it. And I like when you mentioned promoting the public and private sector collaborative engagements in infrastructure development. I wanted to double-click on these collaborative efforts. What are some of the examples of, approaches to these collaborative efforts?
So in terms of partnerships, it needs to be there. And kind of, for example, in Korea, we have a kind of payment cross-border money transfer services providers association. So we are all like private sector players, but we share kind of what we face as like challenges and so on. But it is not the end of our kind of conversation, but we just collect the information. And also we also collect some kind of data kind of as evidence to support our kind of challenges kind of that we are facing are really kind of problematic in developing and or growing our businesses and so on. But it is really connected to the expansion of the scope of financial inclusion improvements as well. And then we all together we kind of bring them to the policymakers, kind of if we have any occasions to have discussed on those issues. And then policymakers are aware of those challenges and so on. So this is not the very rapid process of making changes, but anyhow, kind of we in this sense, kind of it can be a starting point to address that challenges. And then we also kind of private sector players need to be really active and proactive to address or raise that issues to policymakers. If not, kind of they there is no way for them to know about that too. So that would be kind of my kind of experience that I can share kind of in terms of kind of partnership. Yeah.
Thank you for that. Well said. I'll I'll pass it on to Antonia to share what you think should be done to address viability and sustainability. Antonia?
Well, I personally find challenges much easier to talk about than solutions, because it's, of course, from an outsider perspective, very easy to pinpoint what's going wrong. But when it comes to actually providing solutions, I think the answer, again, is very context specific, right? So there's not a fit-all kind of scenario. And I think that's the same for any kind of intervention. So I think the one thing that we have really seen to work better in the instant payment system space on the continent, if we're looking at specific examples, is to, for example, Ghana, I'm going to mention here, this sense of fit-for-purpose payment infrastructure. So in Ghana, it wasn't necessarily a whole new system that was put in place to replace existing systems, but rather, and this is much more simplified than how it actually works, but in Ghana, there's a kind of a connector point where existing systems kind of plug in. So they use what's in the market already and simplified it through a centralized kind of point. So that, for me, is a great example of building a fit-for-purpose payment infrastructure. You're not kind of taking scale from an existing payment system that you have no intention of retiring, and instead building a whole new system from scratch. Because if we're really looking for this public good kind of longer term objective, then we really need to find these viable business models for these instant payment systems. And then they can't be centered in the long term around per transaction fees or interoperability fees. And they need to be, of course, a cost recovery model. So running infrastructure costs money. So there needs to be a market development kind of approach where those that are running the system are actually compensated. But that's not to say that you can't charge for instant payments, right? If we're thinking of cash today, everybody says cash is free, when really it isn't, right? It's just not visible, the cost to the consumer. So the providers need to think around what value-added services can they offer apart from on top of transactions, let's say, where they can recover some of the costs in a different way. So the transaction being the public good, and then the value-added services on top of that can lead to the commercial interests. So I think 2 points then. It's one, if you're going to build a new system, you need to decommission an old system, because otherwise you're going to take scale from one another, or the one needs to morph into the new one, or you basically connect existing infrastructure and update the technology behind it. And then, as Hanna said as well, this kind of collaborative approach in a market is very important. I spoke about the need to create buy-in, especially from the dominant market players that have already existed, have already, founded in the digital payments space. So they need to, if you want them to use the system, they need to be able to create the system with you. So they need to be able to voice what they need. Especially the dominant ones. I think the value proposition for new entrants is very clear because they don't want to build their own infrastructure. But these incumbents have built physical infrastructure. And if we're talking mobile network operators, mobile money operators often have created the tower infrastructure, connectivity. So there needs to be something in for them. They need to be able to build these systems in from the start for there to be a chance. Of course, there's the other way where you can mandate that everybody needs to use the system. I think that is probably a very draconic approach, because in fact, you are actually just potentially making matters worse for inclusivity, because if some provider is forced to use the system and it's more expensive for them, they may actually lead to not investing further in infrastructure and towers, for example, not being built in the less commercially viable parts of the countries. So I think there needs to be that real effort to create together, even though it takes a lot longer, of course. But then I think the role of the stakeholders that are not providers, and particularly operators, but also central banks and public sector more broadly, is to relentlessly educate and advocate for interoperability, because that is just something so at the heart of inclusivity, because the reality is we have a lot of different technology systems that don't speak the same language. We need to integrate them. And yes, it would be great to create a whole new language so they can speak together and we have one single channel. So that for many is out of reach at the moment. Therefore, we need the interoperability. And I think there is where we're seeing a lot of countries with success, especially also Nigeria, for example, is they have done a lot of work and awareness raising about the real impact of interoperability and how that creates the it expands the whole market. Because ultimately in Africa, we are still competing with kind of the informal system, the cash system, not necessarily with each other. So that is where interoperability needs to make headway. The last 2 points I want to mention is, of course, enabling all use cases from the start. We hear from many African governments and central banks, our objective is to go cash light. Cash is expensive for us. Cash is insecure for us. We want to go cash light. But if you really think about it, if an instant payment system only allows for merchant payments or for person-to-person payments, which most of them are limited to at the moment, that creates these kind of one-way streets where you are actually forced to cash out at some stage. So all use cases should be enabled, and use cases going business to business, government to person, person to government, all those different streams, transaction streams, as mentioned before, not only increase the scale in the system, but also really make sure that people see the value. And without value creation, we're not going to switch people into a digital realm and not into an instant payment systems realm. So then the last point is around the protection of consumers. Digital payments, with all its risks, really call for additional protection for end users, especially recourse. And what that really means in practice needs to be looked at. It's not, call this hotline, because then you're going to be, people don't have necessarily airtime to call. Like, what can you do at a systems level, in addition to a provider level, to give people more trust into your system, and where can they go when something goes wrong, no matter how small the transaction is. And that goes hand in hand kind of as well with a protection of your infrastructure, the instant payment system infrastructure, from attacks. I think conflict in our realm and beyond is very real today. We do have instances where national payment systems were shut down in attacks. That, of course, forces people back into the cash economy, when really what we want is for these digital payment systems to be a lifeline in times of crisis. So what does that actually mean in terms of network connectivity, but also in terms of your instant payment system infrastructure? How can you be that crutch instead of the, actually backing people away from cash or back into cash because they can't transact when things go wrong? So I could go on forever, but I'm going to leave it here. Thanks, Jacqueline.
Thank you, Antonia. I was just going to cut you short, but good. It's good you've stopped in the interest of time. I just want to hear the last in recommendations from Carol, and particularly looking at revisiting what she mentioned earlier in terms of regulation, being, some of the challenges that she raised around regulation. Just want to hear what recommendations would be. And can take it from there. Carol?
Great. Yeah, thank you, Jackie. I'd like to start off by talking about having an enabling regulatory environment, whereby we need to promote an inclusive policy and regulatory frameworks to enable successful payment system interventions. For example, the payment systems for crisis-affected communities, from addressing the KYC barriers to convening stakeholders on emergency preparedness and response. And I'd like to give one example whereby the GSMA Mobile for Humanitarian Innovation Program partnered with the UNHCR and embarked on a joint effort to explore how access to SIM-enabled services could be eased for refugees living in Uganda. And together with the support of various mobile network operators in Uganda, the Office of the Prime Minister, that is what we call the OPM, and insights from the UNCDF, these advocacy efforts resulted in the government of Uganda adopting a more proportionate and enabling policy related to proof of identity for mobile access. So that's one example I'd like to give, whereby now refugees and host communities in Uganda are able to have the access to mobile wallet accounts, and this leads to having access to the payment platforms and the payment solutions. The other thing I'd like to mention is, as a consequence, regulation should be proportionate, and regulators should actually avoid both under and over-regulation and should not be driven by specific technologies, nor be biased towards one technology. Also, there's needs for government regulations to enforce regulation for a healthy competition, whereby we have seen in different markets that healthy competition for digital payments is crucial for innovation and also for customer choice. The customer needs to be in a position whereby they are choosing platform X or platform Y that will be fit for what exactly are they looking for. And this healthy competition will encourage companies to constantly and continuously improve their services and offer better features that have more enhanced security and convenience to users. And additionally, healthy competition can also drive down costs for consumers, making digital payments more accessible and affordable for everyone. I'd like to also build on to what Antonia earlier on mentioned about buy-in and talk about co-creation of solutions, whereby there's needs for users and stakeholders. There's need for us to engage with users and stakeholders to understand what are their needs and expectations, and to co-create sustainable and potentially scalable solutions that are relevant and beneficial for them. As a GSMA, Mobile for Development, what we do, we work with MNOs and humanitarian organizations and development actors to come up with what we call positioning strategies. And what we do, we go in country and start listening from the users. What are the needs that they are being faced with? What are the challenges that they're being faced with? And then we work with these mobile network operators to come up with a roadmap of solutions, whereby we are looking at what solutions are best fit the needs and challenges that we've had from the users, and using more on the human-centered design approach. There's also need for us to define the market and know who is your target customer. So this way we are able to offer convenient payment methods that we remove barriers, and that and also that may delay payments and improve on customer satisfaction. And lastly, I'd like to talk about inclusive instant payment systems, which are enablers. Which enablers are technology solutions that ensure equal access and participation in instant payment systems for all individuals. And these, when we're talking about inclusive and access and participation in instant payments, we are thinking about, regardless of your socioeconomic background or your geographical location, you should be in a position to use these payment systems. For example, when we travel to different countries across the world, we have these apps, we have these SDKs, we have all these solutions that have been enabled on our mobile devices. So are we able to use them regardless of where we are located? And these enablers will aim to bridge the digital divide by providing user-friendly interfaces, affordable transaction fees, and support for multiple languages and currencies. And additionally, they prioritize security measures to protect users' personal and financial information. And in the end, we are going to foster trust and confidence in the system from our users. Thank you, and back to you, Jackie.
Thank you very much, Carol, Antonia, and Hanna. In the interest of time, I would Unfortunately, we are not able to tackle the questions, but happy for all of us to share these questions within the Digital Frontiers Institute link as shared in the chat. We have run out of time. Again, just a big thank you to the participants as well. Yes, and see you next time. Thank you.